Hi, I'm Pattu for freefincal, and in this video, let's look at Aditya Birla Sun Life Tax Relief 96 and why I think it's a smart choice for people who want to save tax using ELSS mutual funds for ATC only if they want it and not otherwise. As I record this, it's about half an hour to the exit polls, and many of you will be worried about what the exit poll results would be and how the markets would react tomorrow. Well, the markets are going to react one way or the other. However way they react, whether they move up or down, such a move would probably be temporary, and we'll see. There's a lot of reasons why many people think it would crash and so on. Let's find out. So it's going to be a very interesting week ahead, and as we head to Thursday, so let's keep an eye and see how it goes. So this fund was started in 96 as a closed-ended fund, and when its 3-year period ended in 1999, they made it an open-ended fund. But strangely, I cannot find NAV information before March 2008, either at AMFI or on the Birla website. So I'm not sure why that is the case. At one point of time, if I'm not wrong, Birla had 3 ELSS funds, one of their own and 2 from acquisitions. But just before the SEBI regulations, they had about 2, I think, and one of them was merged into this fund, and this is the only ELSS fund as per the regulations that's currently available. This is a very unique fund, and I'll tell you why that is the case. So it uses a combination of both top down and bottom up stock approaching. That is the stock selection approaches. That is, it will look at the stocks first, the business first, and then look at the sector and then the economy and so on. But it will also look at the economy, the macro economy, and then take decisions. It's been a largely a large cap and a little bit of a mid cap fund. That's how most ELSS funds are. ELSS funds are by mandate supposed to invest in 80% in equity at all times according to the finance ministry rules. There are many interesting information about the ELSS funds. You can have a look at them in this post. So this fund is benchmarked to BSE 200. That's it. You can pick from the top 200 stocks by free float market capitalization. NSE 200 is an equivalent index. However, if you look at this 10-year rolling returns, I hope it's not too blurry. The red line is the NSE 200. The white line is the Nifty 50, and the green line is the Nifty Large Mid Cap 250. If the figures are blurry, you can read the full review in the link below. So the green line is the Nifty Large Mid Cap 250. The Nifty Large Mid Cap 250 is a 50-50 index. So it takes Nifty 100 50% and Nifty Mid Cap 150 50% and adds them together. Notice that there's not much difference between the NSE 200, which is the 200 stock index, and the Nifty 50 index. It's not much difference in the long-term returns. That is the reason for that is because both of them are market cap weighted indices, and the top stocks in both indices by weight will be similar, and therefore it's not much of a difference in return. Whereas the Nifty Large Mid Cap 250, that is significantly higher in return and is also different, however way you put it. And that is why I prefer to use the Nifty Large Mid Cap 250 as my benchmark for ELSS funds, large and mid cap, and multi cap funds in my mutual fund screener, which was released a couple of days ago for May 2019. Yesterday, I had used that screener results to talk about active mutual funds and performance, and their performance, as you may have seen. So to this graph, let's add the fund that we want. And if you did that, so now I've added the Aditya Birla Tax Relief Fund, which is the blue color fund. You can see that the blue line is just above the green line. So it has done quite well in terms of beating a tougher index, which is good. But also look at the fact that I can just create an index by just taking 2 indices. I can take the mid cap 150 and the Nifty 100 150, take 50-50 of this and create an index which is very close to that active mutual fund in terms of return. And if you look at it, if you look at the rolling risk data, so in this case, lower the line, the better. this is the rolling standard deviation or the rolling volatility data, although also called risk. Notice that the green line and the blue line, so the Birla line and the green line, which is the Nifty Midcap 250, they're both quite similar to each other. So although the fund has got a very good track record of beating the Nifty 200 and also the Nifty Large Cap 250 in terms of return, but in terms of risk, it's comparable to the Nifty Large Cap 250. But of course, it's got significantly lower risk than both the NSE 200 and the Nifty 50. So the point I'm trying to make is, yes, this fund is fantastic. There's no doubt about it. But I can easily construct a fund like this. I can construct a ELSS fund based on an index just by taking these two indices 50-50, and I will have it will match the Aditya Birla fund in terms of risk and also provide nearly similar returns. So please recognize that. That's why I keep saying I had showed many ELSS funds in the category. I have not been able to beat this. This is one of the very few funds that have bet this large mid cap 250. So it's a very good fund, but we don't know how this performance will get dropped in future too. So going forward, so this is data from the freefincal equity mutual fund screener. The link is in the description box for you to get it. This is the only ELSS fund that has over every possible 1, 2, 3, 4, 5-year periods in the past bet the Nifty Large Mid Cap 250 index at least 70% of the time. That is, if you look at the 1-year data, there are 1,318 data points, out of which the fund has outperformed the index by 964 times. So 964 by 1,318 is 73%. Similarly, you have 73% outperformance over 2 years, 91% outperformance over 3 years, 99% and 100% outperformance over 4 and 5 years respectively. Not only that, this fund has got a downside protection consistency which is very good. 94% in 5 years, 76% 4 years, 73% 3 years, 68% 2 years, and so on. Downside protection means that typically whenever the index falls, the fund will fall less than the index. And not only that, this fund also has another unique quality which is very rare. It has also got a fantastic upside capture, upside performance consistency. That is, so downside is when the index falls, the fund will fall less. Upside means when the index moves up, the fund will move more than the index does. And look at the consistency over 5 years: 100%, 97%, 83%, 85%. Last 1 year, it's not performed well in terms of upside and downside, but that's okay. You can still you have to discard that and wait and watch and give the fund manager that much of time. So it's an extraordinary fund. It's a very unique fund. But don't expect this performance to repeat in future. Just keep an eye as well as always. This is a very good fund to invest for ATC if you need ATC tax benefits. My suggestion to you is try to complete the 1.5 lakh ATC quota with your EPF and VPF if you have it, or use PPF, or if you have mandatory NPS, use it. Don't use NPS just because for tax saving. If it is mandatory from your employer, but use it. You can use your term insurance premium. You can use, if you have children, you can use the tuition fee. You can, if you have a home loan, you can use that. If you have a home loan, don't buy a home loan just for this. Finish off all that. There's a post on how to get the ATC benefits in the best way. I will link it also below. So finish up all that, and if you still have room for this, you can use this fund. And please recognize, don't fall into the mis-selling that ELSS funds do better because the fund manager are lock-in. There's no such lock-in in an open-ended ELSS fund. It's simply not possible. It's a myth. Distributors mis-sell ELSS funds to people who do not even need tax-saving benefits. So that's what I wanted to say in this video. Now off I go and have a look at the exit poll results, and please spare some time to watch this video, by the way. And I'll catch you later. Bye bye.